And back home, the Central Bank of Nigeria's framework on integrated non-interest window for all the intervention programs aims to support businesses and households that have been impacted negatively by the COVID-19 pandemic. The framework was first announced in June 2020 and subsequently made public late July. Well, since the release of the guidelines for 11 of its initiatives, not all members of the investing public seem to know enough about the program. That's why we're being joined now by the head of Islamic Law Department at the University of Ilorin and a member of the Financial Regulation Advisory Council of Experts to the CBN, Professor Abdulrazak Alaro, to drill down on the objectives of the non-interest window for the Apex Bank's intervention schemes. Good morning and thank you for joining us on the program. Well, the CBN has already has the conventional intervention schemes that have been overwhelmingly subscribed to by members of the public. Tell us, why is it necessary to integrate a non-interest window?
Oh, thank you very much, and good morning to everybody. Well, as you rightly said, the introduction of interventions in key economic sectors is not a new phenomenon altogether. It has been there always. It has been there always. But why, as you ask, why did we need the non-interest window to also be introduced? Yes. Well, you said the already available interventions have been overwhelmingly embraced, well, to a large extent. But I want to draw the attention of all to the fact that we are speaking of a country of over 200 million citizens. So if you look at the figure, I beg your pardon, if you look at the figure of who have actually embraced those interventions up till today, it will be a very small fraction of the Nigerian citizens. And this actually is a reflection of the larger picture of the financial landscape in the country, particularly in terms of who is included and who is excluded. As we speak today, Nigeria still have one of the highest rates of financial exclusion in the world. That is the fact. We are not even comparing ourselves to countries in Europe, countries in America. Let's even look within the continent itself. Nigeria, despite being the largest economy on the continent, still records a staggering rate of more than 30% of financial exclusion. If you take a country like South Africa, also on the continent, which has a smaller compared to our own economy, but it has successfully managed its own financial exclusion and reduced it to the bearable minimum of just 7%. So with this, you will see that there is need for us to improve on our performance in capturing more and more citizens of Nigeria, and this is the thrust of what this particular version, non-interest version, has come to achieve, to get more Nigerians on board, and that will be very good for the system, which will be very good for our economy. If you compare, you just oppose the two figures that I've just given you, Nigeria recording more than 30% of financial exclusion, excluding 30% of the adult population of the country in the formal financial sector. That does not speak well for any economy. You look at South Africa, on the other hand, just 7% is very, very manageable. This may give you an insight to some of the reasons why, despite being the largest economy on the continent, we are still struggling economically as a people. So there is a strong need for the introduction of non-interest windows to capture more and more Nigerians. Secondly, if you look at some of the objectives of these interventions, whether they are conventional or non-interest, one of the key objectives is poverty alleviation, job creation. You cannot successfully manage all this. You cannot claim to have reduced poverty to a bearable, a tolerable limit when you have a large percentage of your population still excluded in your financial interventions. And this is the truth. This is the reality. Financial exclusion is always said is either imposed or a matter of choice. What we have observed in the country is that our own financial exclusion in most cases is imposed, meaning that we have willing, we have qualified, we have competent and able Nigerians who are ready to assess the interventions, but on account of their ethical preference, religious belief, they are barred from assessing them. So you cannot also achieve your target of reducing poverty, of creating jobs for the larger society of the citizens of Nigeria when you are not looking at those very large number of your citizens who are still excluded from all your interventions. In the part of the country where I come from, we have a proverb that says, if you have one wealthy individual in the midst of 6 indigent, you have only succeeded in having 7 poor men or women. They are all poor. So the earlier the better we start thinking along that line, that it is not a matter of just taking a very small fraction of the citizen when we are talking of economic empowerment, when we're talking of poverty alleviation, we are talking of job creation. It has to be something that reaches as high as possible of the number of the citizens of this country. So
Professor Alaro,
those are part of the reasons.
yes, you've talked about the key objectives of this now, but tell us, are the programs totally different from the existing intervention programs, or the non-interest window is only integrated into the existing schemes?
Okay, yes. Yes, they are not different in any way except in that one way. The interventions that have been introduced up till this moment, before the recent ones, they are all interest-based. These new interventions are only embedding the non-interest version into the scheme. So to answer your question straight away, they are not different from the interventions that are already in place, but they are different in their way of operation. Those interventions are interest-based, while this one is non-interest. I need to mention something here. When people hear non-interest, their minds usually go to a loan being given without any amount of interest or return being paid. That is not true. What CBN is introducing is a form of, is a way of financing in a non-interest way, which will mean participation between all parties involved. They will all participate in risk bearing. They will participate in ownership of assets involved, and that will eventually lead to the entitlement of all parties to the return or dividend or profit that is derivable from the exercise. So it is a non-interest financing, but it's not non-interest loan. It's not a loan that you will take and you pay back as you got without any dividend or return. And this is the whole idea about non-interest financing all over the world. It's also called Islamic banking in some other climes. So it's a way of saying, look, come, let us become partners in business. We share the risk, we share the ownership, and we are all entitled to the benefit derivable from that. So that is the key difference between what was on ground before and this new introduction.
But how does the non-interest window operate? Does it operate differently from conventional offerings?
Of course, if there's no difference in the mode of operation, then you will agree with me there was no need for its introduction in the first place. So the modes of operation are very, very different. Let me put it this way. If you look at the entire structures used for these non-interest interventions, you will never see in them a way of giving out or advancing money and expecting the beneficiary to repay with a percentage of loan. But I've said it earlier that does not mean that whether the CBN or even the participating financial institutions will stand to gain nothing. They are also in business. So the mode of operation of an Islamic financial entity is that of participation. The ownership element must be there. The ownership element will automatically mean that all parties will bear the risk associated with ownership. And in that, they are entitled to the profit or benefit that will arise from that. This is premised on a golden principle that we have in Islamic law that says benefit goes with damages and revenue follows liability. A very important difference between conventional financing and non-interest or Islamic financing is the fact that if you are not liable in a way, you cannot claim to any profit or benefit. But if you are ready to take risks, to participate, and that is why this form of financing is mostly concerned about the real sector of the economy, where goods and services are provided or rendered. You must do something to earn anything. You must participate, you must bear risk, and that will entitle you to a profit or benefit derivable. Coming into more details, to achieve this, there are a lot of contracts, Sharia-based contracts that are used all over the world. You know, this issue of non-interest financing is not peculiar to us as a nation. In fact, as I'm speaking with you this morning, at the last count, we have almost 1,500 entities all over the world operating this form of financial interventions in more than 80 countries. So they have their own structures, they have their own contract that they use, and those are what have been exactly used in structuring this product. It may sound too technical to our audience at home, but let me just mention some of those contracts. For example, we have in the Anchor Borrower Program a structure that is called Salam and Parallel Salam of Islamic financing was actually used, which will mean, in essence, a two-layer or two-tier contract. On one part, between the Central Bank of Nigeria and a participating financial institution, which will use the original Salam. The other one is what we call parallel Salam, and that one will be directly between the beneficiaries, citizens of Nigeria, and any participating financial institution. Since these interventions, the new ones, are non-interest based, the only participating financial institutions that can key into these are the non-interest financial institutions, the licensed non-interest banks in Nigeria. So that is just one example. In other, we have up to 13, not even 11. It's about 13 interventions that have been released so far. The new ones, 11, but there are two others, I believe, that have also been offered before. Another structure that was used as a contract that will give the same result, the result of being participant in the economic sector, contributing together, bearing the risk, owning the asset involved, and thereby being entitled to the dividend of profit. That is what we call mudaraba. That one was used to structure, like, for example, there is a particular intervention for the healthcare practitioners, those who are in the health sector. It was structured in such a way that it will also be two-layered. There will be what we call restrict mudaraba, because it involves a kind of working capital intervention. So it will be a restricted mudaraba between the Central Bank of Nigeria and the participating financial institution. Why those financial institutions already they have in stock many contracts that CBN has approved for them in dealing with their various customers. So they are free to choose any of those ones, like the one I mentioned a short while ago. Salam is there, Istisna is there, Murabaha is there, Musharaka is there, Mudaraba is another one. So they will just choose any of those contracts that have already been approved for them by the regulator, the central bank.
All right, Professor Alaro, you've given us a breakdown of how it works, but I'm sure many would also like to know those who are eligible for this non-interest financing. Is it open to non-Muslims as well?
Thank you very much. That's a very important question. Non-interest financing all over the world is not meant for Muslims alone, not only in Nigeria. If you go to Britain today, in fact, Britain had its own Islamic bank ever before we had one in Nigeria. It was called Islamic Bank of Britain many years before we started having our own in the country. When you go to the World Bank today, it's a global institution. World Bank has a unit, a division for Islamic banking. And interestingly, That unit is headed today by a Nigerian. If you ask me, I will tell you he's a Christian Nigerian. It's not even a Muslim. The man that is heading the Islamic, they call their own Islamic, not even non-interest, at the World Bank. So this is to allay the fear, the unfounded fear of saying this is just for Muslims. No, it's not true. It's there for everybody that is ready to key into the structure, how it works. It's not a matter of advancing loan and expecting the beneficiary to pay back, irrespective of what the businesses go through or what the money is used for. No, it has to be participatory. So that is one. Then number two, when we talk of non-interest, I think we need to educate ourselves. It is not only in Islam that interest is forbidden. Yes, we have verses of Al-Quran Al-Karim, the Noble Quran, that prohibit non-interest. But I can authoritatively say that we have in the Bible as well. We have in Exodus, in Leviticus, in Deuteronomy, and some other verses of the Bible that equally prohibit drilling in interest, either taking or giving. So in essence, this intervention and all other financing initiatives of non-interest financial institutions, either in Nigeria or elsewhere, are never meant for Muslims alone. Anybody that is mindful of ethical preferences, also religious beliefs, is interested in participating in the real sector of the economy, this form of finance is the way to go. And that is why it has been thriving year in, year out all over the world. Like I told you, we have in more than 80 countries of the world today where this kind of financing or banking has been embraced.
Now, in terms of terms and conditions, now, this has to be profit sharing as opposed to interest rates application, exactly, just like you've told us. But tell us more about this in relation to the program.
Okay. Yes, it's participatory in nature. For example, some of those interventions actually give a cap of what is realizable as a profit. For example, in some of those interventions, CBN will allow you to go to the extent of 9%, in some 5%. These 5 or 9% will now be shared between the participating institutions, including the Central Bank of Nigeria itself. In some of those interventions, Central Bank is very magnanimous by saying I will take just 2% of whatever profit that you derive, and the participating bank will take the rest 7%. So it's a very good incentive. It's also applicable in the conventional practice that way. So it's participatory. Whatever is derivable as profit is going to be shared, and it's not going to be exclusively taken by one party. While the beneficiary on its own is structured essentially to help a beneficiary to improve on its means of livelihood, and it will be the bigger beneficiary, while the institutions participating will share, you can call it a fraction of the profit that is derivable in the exercise.
All right, Professor Alaro, please hold on to your thoughts there. We'll continue the conversation with you in just a moment. We'll be back in just a moment. Welcome back. We still have with us the head of Islamic Law Department at the University of Ilorin and a member of the Financial Regulation Advisory Council of Experts to the CBN, Professor Abdulrazak Alaro, with us talking about non-interest banking. Thank you, Professor Alaro, for sticking with us. So let's continue the conversation now. Earlier on, you told us about, of course, those who are eligible to participate in the non-interest banking, but then would also like to know what is the criteria for accessing these facilities?
Okay, thank you. That's a general question that can only be answered in specific ways. Each of those interventions has its own requirement of eligibility. So whoever, my advice to Nigerians is, if you have read through all the guidelines and you have identified the one that is most suitable for you, then go to the eligibility section of the guideline of that particular intervention. It will tell you what you need to take with you, what you must have before you can actually access. But I have very good news for particularly the teeming youth of this country. These interventions are actually very, very youth-friendly. In one of them, the one called Creative Industry Financial Initiative, It's as simple as that. A fresh graduate without any collateral, without any security, just come with your NYC certificate and your degree certificate, and somebody of a family member that can stand for you without any requirement of equity participation of any percentage, you can access this intervention. So it's a very relaxed requirement when you look at, we compare this to what you will encounter when you go for financing in commercial banking, whether they are Islamic or conventional. So it has to, like I said, it must be answered in specific ways. Each of these interventions has its own eligibility requirement that I will advise every interested party, Nigerian citizen, to go through. But believe me, they are very, very friendly to every, no matter what segment of the economy you belong to. If you are farmers, there is a particular one that is meant for non-oil export. If you are engaged, because Nigeria is looking for ways of diversifying its economy. So it's also part of that. If you are into that sector, producing something that is non-oil, because we are trying to move from being a monolithic economy to a more diversified economy. So that is another way. That's another intervention that's specifically structured for the non-oil export. As you must be, you may be aware, there is one that is meant for those who are in the textile sector alone. So textile sector, if you are not in that business, you are not qualified. So like I said, each of the intervention must be critically looked into, studied for any interested party.
Now, each of these intervention schemes have various objectives, just like you've talked about. And for the agriculture scheme, for example, it aims to reduce unemployment rates by engaging as much as 370,000 youths over the next 3 years. How sufficient is this target for the agriculture sector?
Well, how sufficient? Well, I would say it is not sufficient, but it's just the beginning of an exercise. Yes, I want to believe that 370,000, as I said in the beginning, when you are talking of a nation of more than 200 million citizens, is an insignificant figure, but it's something good to start with. And this is part of what I think CBN has thought of by bringing this non-interest intervention to see those who are not captured up till now, to include them, to bring them on board. You see, Nigeria is in dire need of diversifying its economy, as I said a short while ago. We need to boost our revenue base by looking into other sectors different from oil. And we can only do that successively if we are able to capture as large as possible the number of citizens who are skilled in various fields and who can contribute to the development of our economy. Look at what is happening in the world today. Look at how China is overtaking economy after economy. China has overtaken Europe, is already chasing United States of America. So it's projected that in no distant future, China will become the first economy in the world. Yes, Chinese are hardworking, you will say, but don't forget they have an advantage, and that is the large number that is perfectly working for them. On the continent of Africa, this is an advantage that we also have as a nation. We have the number. It's only left for us to try and create, just like these interventions and other schemes, that will accommodate as large as possible the number of skilled citizens of this country. And one way or the other, we may be the next China of the whole world.
Now, as for the non-interest guidelines for intervention in the textile sector now, with the provision of a 50 billion naira special mechanism, where do we have the targeted investors?
The target, they are already known. They are those who are already in the business of textile production, and they know themselves. And that is why, if you look at the guideline made specifically for this particular intervention, it was a collaboration. It was like a cooperation between the Central Bank of Nigeria and Bank of Industry. Bank of Industry actually has that list, long list of investors in this particular sector. And that is why CBN did not go directly to commercial banks to do this intervention, but it has chosen to do it through who knows better the sector, and who knows, like you said, the targeted investors, and that is Bank of Industry that CBN is partnering with in introducing this particular scheme. I must mention something here. You see, in the other interventions that are going to be accessed through non-interest financial institutions, I've told you they have no problem. They already have a number of contracts that are suitable for this. But in the case of Bank of Industry, that was also critically looked into. Bank of Industry does not have in place non-interest financial instrument or contract. And that is why in the guidelines, BOE has been mandated to assess non-interest version of the intervention in the textual sector. It has to choose one of those non-interest financial instruments to be able to key into this particular intervention for the textile sector that is non-interest based. But for knowing the targeted investors is not a big deal. BOE has a very long list of them, and that's why CBN is partnering with it.
Professor, the feelers that we're getting is that the initiative is commendable, but there's one concern, and that's the fact that there are only a few non-interest financial institutions that serve as off-takers. What's your committee doing about this?
Okay. Yes, you are very correct in your observation. PC, you are very correct. Up till today, we have two full-fledged non-interest banks in Nigeria, Jais Bank and recently Taj Bank. We have two windows as well, a window of Sterling Bank and another one of SunTrust Bank. But if you compare this with the market, the huge market, financial market in Nigeria, yes, the number is very, very low. But don't forget that this is a banking system that has just evolved. So it is still developing. And we hope as we move on, we'll get more people. This is an opportunity for investors to look into this sector of the economy to invest too. It's a very promising market. I told you in more than 80 countries today in the world, they are embracing it. So we still have a long way to go. I will agree with you. The numbers are not large, but as a just evolving system, it's not something that is very bad. We started with just one, Taj Bank, about 10 years ago. They are now 4. We have a number of microfinance institutions, also in non-interest based, but there is room for improvement in this. Another area that I would like to mention, since you mentioned something in relation to the non-interest banks or financial institutions in Nigeria, I will also advise them to improve on their balance sheet. Yes, the largest non-interest bank in Nigeria today has a balance sheet of less than $1 billion US. Well, to us in Nigerians, we will say 1 billion is a huge amount of money. Looking at the exchange rate of 460 something now. But believe me, in the banking world, in the financial sector, this is a very small amount of money. Maybe I would just give you 2 examples of some of the Islamic or non-interest banks in the world. If we look at Raji Bank in Saudi Arabia, it has an asset of almost 100 billion US dollars. The Dubai Islamic Bank, which is the pioneer, the first Islamic commercial bank in Dubai, has about $75 billion in assets. So we in Nigeria, we still have, we have to do more, but I think it's a good beginning. Less than $1 billion US dollars today, but it may improve. And that is a way of telling investors who are still looking at opportunities, this is a very good opportunity for them to come and invest.
Now, how much of an awareness campaign are you putting out there to promote these programs?
Well, I'm an advisor to Central Bank of Nigeria. You know, the CBN has its own publicity apparatus, and I think they should be concerned about how to disseminate information about this intervention, which I believe they are doing. On our own part, as experts, as technical counsel, we have developed the structure. We have made sure that they are truly Sharia compliant and are business friendly and are economically viable. But the issue of publicity, making them known to the members of the public, the CBN has its own apparatus for that, and I believe they will do. They are doing something that they will do more. Maybe this program is part of what they are doing. I don't know.
All right, well, since the frameworks have been released now, how much of patronage have the various schemes enjoyed?
It's too early to measure now. It was released in June, exactly about a month ago. The circular to the participating financial institutions, I realized, has just reached them 2 weeks or so ago. So it is too early to measure the level of participation now because it's something that is just starting. So maybe in the next 3 months, 6 months, it will be ripe for us to say this is the level of patronage that has been experienced in that exercise.
All right, just before you go, Prof, tell us how risk management is done in this non-interest financing.
Oh, thank you very much. This is a very key aspect of the whole thing. We are talking of risk element in non-interest financing or in non-interest banking. Is very, very important because it is through risk assumption, assuming risk, that you are entitled to profit. So it has been catered for minutely and comprehensively. The participating financial institution will have its own risk bearing element, percentage of bearing the risk. The beneficiaries themselves, whether they are farmers, whether they are graduate youths, whether they are industrialists, whether they are textile, those who are in the textile subsector, whether they are medical practitioners, they are also going to bear a level of risk because risk element, risk participation in risk assumption is very, very key in Islamic or non-interest financing because that is the only thing that entitles you to profit or benefit. CBN on its own part has indicated clearly its readiness to take the necessary risk. It's already spelled out in the guideline what risk is going to be taken, what level of risk is going to be taken. And that is why I mentioned the issue of collaterals and the issue of security. This is also part of the risk management strategy. Whoever is approaching a participating financial institution to assess those interventions will be asked to provide adequate and necessary collateral or security. Same for some interventions that are targeted at youth, in which those requirements are actually relaxed to a very large extent. But that does not mean they are taking anything for granted. So it's very, very important and it's been seriously dealt with.
All right, Head of Islamic Law Department at the University of Ilorin and a member of the Financial Regulation Advisory Council of Experts to the CBN, Professor Abdulrazak Alaru, thank you for sharing some of your time with us this morning.
And thank you for having me. Good morning.